On behalf of Crosscheck Media and BizTalk Today TV, welcome everyone to Financial Compass with Mish Schneider. I am your host, Todd Schoenberger, and joining me today is none other than the star of the program, the chief strategist at MarketGauge.com, Mish Schneider. Mish, Happy New Year. So much has happened since we've last seen each other. And we got to talk about, first of all, oil, the oil trade. Venezuela, we don't have to get into the details of what happened over the weekend. Everyone knows about it. But if you're a trader right now, how are you looking at crude oil these days?
Okay, let's just step back a little bit. One is hello and Happy New Year. Two is yes, it seems to be this year has started off like the classic fire horse that we talked about was going to emerge in February. Well, it didn't take its time, right? Right, boom, we're like galloping, we're bucking, and I think hour by hour, we're starting to see changes. So this is a really good year to remember some basic rules. And number one is be aware of volatility and prepare for it when you are buying or taking profits or putting in your stops. I think that's going to be the theme all year. So that really is our segue into oil, right?
Okay.
Now, oil hasn't really been all that volatile, which I think if you look at the old trading adage, don't short a dull market, I think we can actually call crude oil kind of dull, right? I mean, considering the Venezuelan news, and I like to say there's the worst case scenario and the best case scenario with that. The best case scenario would be bearish for oil. The best case scenario would be that we get the oil down closer to $50 a barrel. Americans have more money in their pocket because the fuel prices are lower. The Venezuelans are happy because they're getting the money from the proceeds. China behaves itself. The Venezuelan government behaves itself. That's the best case. The worst case scenario is that it all blows up. And there can be a million reasons why that could happen. And not just from Venezuela. We have other pockets of the world right now to keep an eye on.
Right.
And I wanted to frame it like that, Todd, because I am kind of like that as a trader. You have to look at the best case and the worst case, and then you have to apply that to your trading. So with that said, right now, where is oil? If we look at the February contract, it's at $57 a barrel. I think bears would find that surprising because they thought it would crash. Now, bulls were also a little frustrated, though, because we really have remained under the 200-day moving average in the futures market and actually in the USO, if you want to use a corresponding ETF, this whole time. Excuse me. So if we get two closes, I used to say 60, but now I'm bringing down my target to $59 a barrel, get a couple of closes over there. I don't think you should overthink. Obviously, the price always precedes the fundamentals in my experience, especially as a crude oil trader from back in the day. And I would say, well, maybe it's not necessarily the worst case scenario, but things aren't necessarily going as planned.
Okay, so that's on the oil contracts. Now let's start breaking it down. As you know, in Venezuela, what they're pumping out of the ground is heavy crude.
Right.
And there's only a few selective refineries that actually can refine it and process it into higher volume products like petroleum. So one of those companies is Valero Energy. Now, there was a discussion yesterday that Venezuela is going to be sending $2 billion worth of crude oil to the United States, which I would imagine is a huge windfall for a company like Valero. If you're
Yes.
looking at the equities, at the stocks that are in that industry, what are you thinking? Is now the time to be buying selective oil companies, or are you thinking maybe just stay away for now?
Well, I actually, again, like to go more general when it comes to this sort of situation where you want exposure, but you don't know necessarily which is going to be the company to get tagged, right? So
Right.
yeah, if you look at the chart strictly, I mean, Valero looks amazing. It's just consolidating after making that gap up. But Exxon doesn't look too bad, and Chevron doesn't look too bad. And even let's look at little Buffett's portfolio. He's been in Occidental Petroleum, which is not participating, but you never know. That actually, in terms of risk reward, might be something to keep an eye on. So with that said, if you want exposure to all of it, I like XLE. I think XLE is looking pretty sweet right here. In fact, as we're talking, I'm going to look at a chart so I can speak with some authority.
Okay.
But we had the big
Absolutely.
move in sympathy with what happened with Chevron a few days ago. We bounced off of a 10-day moving average, which is interesting. We're certainly in a bullish trend, excuse me. And if we get back over like 46.50 in XLE,
Hmm.
I think that's the trade of the year, actually. We've talked about energy last year, right? Remember my all energy hands on deck? Well, this, you never know how things are going to play out. And here they are playing out. All energy, big corporation hands on deck. Probably wouldn't have been in my bingo card, but I'm not so surprised by it either. So, yeah, I think that there's opportunity. But again, if you're buying something that's already rallying, like if we take a look back at Valero that had that gap, just try to put your stop under the gap so that if you have a massive correction, you don't get caught in it. And don't get too attached to the outcome, because if crude oil is telling us anything, it may not be the windfall as we think, because it's a lot harder to get it out of Venezuela, because the infrastructure, from what I've heard, is not great. Could be 10 years before it's really efficient.
Yes, and quite a windfall though in 10 years though, so that there's more to be seen there. Let's switch over now. The geopolitical issues that are taking place, you would think gold and silver will be rising and doing quite well. We actually saw both metals, including copper, drop yesterday. But there's another explanation though. It has nothing to do with supply and demand. It's all
Right.
about contract consolidation. Can you explain to the audience what exactly all of this means?
Well, there's actually right now there's a commodity index rebalancing going on, and it'll be rebalanced for the next 5 days from when we're talking here on Thursday, the 8th. Excuse me. So, what does that mean? That means over the next 5 days, they look at the entire portfolio of commodities and things that have been overweight, like gold and silver and copper. They may rebalance to lower, and things that have been underweight, like some of the food commodities, for example, might actually get a better balancing position. And it's just jockeying. I certainly wouldn't necessarily worry about it too much. But what is interesting, what corresponds with that is right. We've seen silver and gold and copper come down, but let's not forget silver margins have gone through the roof.
Right.
The fundamentals have not changed at all. Gold continues to be the mirror that reflects the cracks. And we've talked so much, you and I, about what those cracks are. So I don't feel we need to repeat that.
Hmm.
And overall, the silver to gold ratio still favors silver. So I just think that you have to be a little patient here. I still have my silver position on. We're still long gold miners. We're still long XME. We've taken profits, but that's just the way we roll. And as far as I'm concerned, unless silver breaks $70 or gold breaks $4,200, I looked at the copper chart. If it breaks down under 5, if you're looking at the March, it's right now trading at around 5.4.
Hmm.
Um, I'm not concerned. I actually think the longer it consolidates and holds is probably the better for not only risk, but maybe the margins will come down too. We'll see.
Okay, I like that. I mean, and definitely it's been the trade of last year, and it looks like it's continuing this year. So that's your short term, though. I mean, do you think that this is the metals will continue to outperform throughout all of 2026, or if you're a trader or an investor, should you start be thinking maybe I should lock in these profits sooner than later?
I would use trailing stops. That's what we're doing.
Okay.
I mean, I've been in silver for so long, so that as far as I'm concerned now, I give it enough room for the volatility, but not so much room that if it really starts to reverse, I wind up losing a lot of my profit. So $70 a barrel is where I'm looking at. We break 70, I'll get out. If we're going to hold 70 and we're trading, we're just basically really chopping around between what, 72 and 78. We got to 80 briefly. To me, that's good news. So I'm still very bullish silver, particularly silver, but I'm also
Okay.
bullish gold. Maybe gold's upside isn't as great because of silver's industrial use, and we know that it's going to be necessary. And the same thing with copper. And there's, again, talk of shortages in both of those metals. Gold, by the way, going back to Venezuela, apparently has a lot of gold, but it hasn't really affected the market at all. Do I think it's going to outperform? What I think is so exciting about the markets is that I don't worry about that. I'm just happy that it continues its trend, maybe consolidates, has its corrections. While I think there are so many other areas in commodities that we should be looking at right now, we talked about oil, but I'd like to actually really go on from there into some of the other commodities that I'm very, very, very bullish on right now.
Okay, well that's wonderful news. Let's switch gears here. Literally, I want to talk about this little startup company named Ford. You may have heard of it. We were talking the other day and we are going over their numbers, especially their EV numbers. If you're a Ford trader, are you a buyer or trying to get out of it right now?
Well, this is why I had written you before our show, because I could have sworn I talked to you about, I'd watched CBS Sunday Morning,
Okay.
the CEO of Ford. This is why I thought we had the conversation, but could have been somebody else. But we'll have it again,
Okay.
or maybe for the first time. So, and
It's an exclusive for the first time on Financial
exactly
Compass.
right. So I sometimes I like to watch CBS Sunday Morning. Believe it or not, I've gotten some of my best ideas in terms of consumer instinct from watching that show. Because if they feature something, then you know it's hot, right?
Right.
And so Ford CEO was on, I can't remember his name, sorry, whatever. But he talked about two things. Number one is he said that he drives a cheap Chinese EV. And don't freak out that I'm, being unpatriotic or not supporting America, but I want to learn everything there is to know about that Chinese car so that I can copy it. Kind of a nice reversal there, us copying something Chinese, um, and create an EV for $30,000. And I think if there's a niche that was missing in the EV market, and you know how much I've loved Rivian, that's been my big
Right.
stock for the last couple of years, and
You have spoken about Rivian in the past, yes.
it doubled. Okay. We were talking about it at $10, $11. It's now over 20. That's
Right.
a double. I love it. So Ford, with the 30,000 though, started to get my interest because of the fact that he was really talking about hitting an audience that right now can't afford a Tesla or a
Mhm.
Rivian. And I think that's brilliant. He also was saying that he really did not want to pass on the cost of the tariffs to the consumer. So instead, he was actually hitting it more with his own labor department, which I thought was kind of interesting. But nonetheless, I'm sure automation is coming. And I think I've seen recent pictures of the plant with all the robots doing the assembly of the cars now. Another story. The point is that really sent the stock up, right? Because, yes, because of the good numbers that came out. If you
Right.
look at the chart right now, and let me do that because
Okay.
even though I took notes, it's easier if I look at the chart. So the high in Ford was made at around $19 in 2022, and now we're trading at just under 15, like 14.45. So we certainly have upside and beyond. Ford, compared to Toyota, has really been languishing, especially if you compare it to Tesla, if they're going to enter the EV market. So I think right now this $14, $13.50 to $14 is really strong. And I believe next stop is 16 from here, and then we can reevaluate. But if we can take out 16 and then 19, I mean, I'm not sure. If those EVs get off the ground, then it'll be a matter of waiting for the numbers and seeing if consumers start buying. I think they will.
Okay. So I know because we started off the show talking about oil and now we're switching over to the EV side. I do want to just get your thoughts quickly before we close out the show about electricity. Is this an area because with you have these EV companies that are continuing to evolve, there seems to be more of a push to the EV side, but there's also the AI side and the need for electricity.
Right.
Are you, from a commodity standpoint, if you're a trader, are you saying now I need to look at these types of companies, the infrastructure type of companies, or is this again one of these, let's just wait and see what happens down the line?
Well, I think the buzz last year was the electricity. Am I right? If you look at Constellation Energy, it was
Right.
really doing well, and now it's been falling. So that might be a great buy opportunity. I'm not sure. I think there are so many other interesting things to look at right now. But in terms of the whole energy, there's no denying that we're going to need energy to fuel the AI data centers. But we
Yeah.
can see the sentiment switch has now been more to the memory side of AI with the chips and Micron being the big winners so far this year. And so that's how the herd goes, right? So once we see more, well, first of all, we have to see what happens with tariffs. Then we have to see what happens with China and semiconductor chips. Then we have to see if we're really going to be reshoring and onshoring money to actually build the data centers like the way the plan is by the Trump administration to have it here. And if all that goes according to plan, yes, of course, electricity prices have to go out. But I'm right now, I think nuclear got ahead of itself last year. And now I think it looks ripe for more of a rally if you're looking at uranium and CCJ. So you got to kind of find, try to avoid things that are crashing until they look like they're so tempting to buy. And look at the things that are starting to really percolate and after their correction breaking out. And uranium is kind of classic in that.
Okay. Well, that's great news and great advice too. Mish, go ahead.
I just throw one more thing in because I said I liked other commodities, but we didn't say what it was. Watch wheat, corn, soybeans. Look at DBA. DBA had broken down, hit 25.40, held. It's now trading over 26. To me, that's a sleeper trade. This year, there's a prediction for a lot of climate chaos, crop disruption. Obviously, geopolitical situations will affect that. Sugar is back over 15 cents, my little trifecta barometer. I love DBA. I'm in it myself. I think that would be probably, to me right now, a lot more potential on the upside. Even though I love silver and gold and copper, I think you've got big, big room up there. I just wanted to add that.
Wheat, corn, and soybeans. That's wonderful news. And yeah, that's great. And we'll see what happens down the line, especially this year. And like you said, maybe we'll have some climate chaos. Mish, the financial compass, are you north, south, or just neutral right now before we go into next week?
Well, in commodities, I'm very bullish.
Okay.
In equities, I am definitely bullish, especially since my economic modern family is all feeling very happy right now. And yet, I also know that commodities and equities can only go up together for so long until the inflation numbers, which feel almost artificially low from what we're seeing, start to show that inflation is actually not necessarily done, but more of an ongoing problem. So yeah, so bullish in everything until we see that departure.
Okay, well, I know we'll talk more about it next week because Financial Compass returns next Thursday at 12 o'clock Eastern live. So you definitely want to watch and tune in then. Mish, thank you. I know you're on a tight schedule today, and I know you have a lot of other media hits to do, so I appreciate you joining me today on your show on Financial Compass.
Thank you. You are better than a cup of coffee. I love as I said to you before, I love your enthusiasm, and thank you so much for your support.
I appreciate it. I was on a late flight last night, and I'm just like, I'm trying to get my bearings back. So
adrenaline overload. Okay.
There you go. So on behalf of Mish Schneider, I am Todd Schoenberger. Thank you once again for joining us today on Financial Compass. We'll catch you next time. Take care.
Access real-time data and intelligent analytics exactly when you need them. Get the right data at the right time. Learn more at quotemedia.com.